Hey traders, this is Ron Haidt at Market Tamer. Happy Thursday. Hope you're having a fantastic day. As always, nothing in this presentation shall constitute a recommendation to buy or sell any security. Trading stocks and options involves risk, and specific financial issues should always be addressed with your financial advisor. We'll kick off here with the SPY, which I have a long-term bullish position in. The S&P 500 ETF now is down 4 of 5 days. It sounds so awful, right? But there's really no damage being done. You know, we peaked out at 291.74. We're at 288. It's like a whopping $3+. So we're still holding above the red line, which is the 20-day exponential moving average. We get below there, it's just like I've been saying. The key one is that institutional moving average, that 50-day SMA in orange. We get below there, that's what opens the door to a bigger pullback. The fact that we're having a little bit of a down move right now after Labor Day here in the US on Monday, that's what the market typically does this time of year. It doesn't mean we're going to crash. It just means there's some profit taking, there's some back and forth movement down, and then we get into, you know, one of the hottest times of the whole year to trade, which I know I mentioned last night, but I'm going live tomorrow at 12 noon Eastern, and it's not going to be recorded. At the bottom of this video, you guys can register. So you definitely want to be there. We're going to talk about the top 10 stocks. I'll let you know how I'm looking to play the end of the year and how we're going to be able to spot these stocks that have historical track records that just blow other stocks out of the water. It's like the cream of the crop, the best of the best. So I look forward to seeing you guys there. Let's keep going here with some other stocks. Let's just look at the Qs since we're here. They're pulling back as well. There we finally go, down 0.9%. They did break the red line, but again, let's just watch the orange line. There were tech stocks that had a tough day. And then the IWM, which is the Russell 2000 ETF, it was down 2.68% right at the 20-day, but we're going to go back into this box. So on the IWM, I'm really not that concerned if we break the 50-day. I'm more concerned about that consolidation low back around 162.50. And then interestingly, remember the diamonds was lagging for so long and it's still not at new all-time highs. The Dow was actually up 0.1%, you know, so really no change there. Now Facebook, it is coming down and getting really close to that support zone. You zoom in. This is the area I talked about back in March and April. I said if we get down there, that's going to be potential bottom. Played out like clockwork, and then up we go from 160 to 220-ish. Then we gap down, we try to rally, can't get above the red line, which is your 20-day EMA, and now we just, yesterday and today especially, this volume even picked up. We crashed lower, 162, target, low to mid 150s. There's still another $6-7, 4-5% before we get into that supply zone, I think. How about Micron? This stock also got taken to the woodshed today, losing nearly 10%, 9.87, huge volume. If I zoom out here a little bit, the target's 40. That's the low from February of this year. That's still 10% lower before we might sort of see a bounce. And it's actually a double bottom going back to December. We break 40. Now that's interesting. Not say it's going to get there. We're still in our downtrending channel. Even from a seasonality perspective, this is sort of how, you know, semi-type stocks, tech stocks will act. So it's no shock it's pushing lower at this stage. But I would be getting ready. It's going to be one of those stocks we're going to look at as well heading into October. Here is CLDR, Cloudera, 24% higher. Took out the June high. The gap fill and double top back at 22.50 is the target. That means almost 30% or so from a technical perspective. That one's looking good. Macy's is teetering on support here at 35. If 35 falls, there's a gap fill down near 30, 15% or so lower, but the 200-day is there. Maybe that stops it a little bit. That's about 10% lower. The bottom line is below $35. It opens up another door for, you know, considerable drop here potentially in the short term. And Johnson & Johnson, JNJ, had a nice move to the upside today, 0.75%. Volume was pretty solid. If I zoom in here, the target right now is 145. And if you look, once it got above the 200-day, we did pull back, but we sort of hung around the 20-day. We break out, and then we just go sideways into a little bit of a bull flag. You can see how this is like a rising channel. Well, today we just popped up. So that puts us back up here. I think the 20-day EMA here in red could be a good potential trailing stop because look how good it's acted before. All right, so that is it. Remember, webinar Friday, tomorrow, September 7th, noon Eastern. You need to be there. It's complimentary. It is invite only for everybody at Market Tamer and Financial. I'm going to be showing you guys the hot stocks for year end. Now is the time to prepare, because once we start getting in towards the end of this month, get into October, some of these stocks begin their run, and knowing which stocks outperform to the upside versus the laggards or the ones that even go down can truly be the difference between having a great, amazing year end or wondering, geez, how did I pick that wrong stock again? What was I missing? And that's the information I'm going to share with you tomorrow. So look forward to seeing you there. You can register at the bottom of the video. So have a great day, folks. Have a wonderful Friday, and I'll see you tomorrow.